Arnav, let's also talk about ways to invest in equity. A lot of them prefer mutual funds because it's maybe a safer option. But a lot of investors who not necessarily are very well versed about the volatility involved prefer direct stocks. What kind of investor should be taking the stock market route? And what type of investor should be taking a mutual fund route for stock markets?
So first of all, let me tell you that, both of these options need not be mutually exclusive. So an investor can have both stocks as well as mutual funds into their portfolio. But for many categories of people, they might start off with one of them and then add the other in various proportions which is suitable for them. So for an investor who is starting out, who is not well informed, for them a mutual fund becomes the right route to ensure that they get their equity exposure. The reason for this is very simple. You have professional fund managers who are managing your money. Second is that for small amounts you are getting a diversified exposure. And third is that you do not need to look at the portfolio at regular intervals, in the sense that you do not need to look at it in terms of how are the individual companies doing, what is happening and all, because the fund manager is doing it for you. And the fourth thing is also that the mutual fund option provides you with a wide variety of options in terms of a systematic investment plan for regular investing. If you want to withdraw regularly also, there are systematic withdrawal plans. So all these facilities are available and you can invest with very small amounts also. So this is a kind of investor who can prefer mutual funds. For an seasoned investor who knows about the markets, who can do research, who has time on their hands, for them some direct equity exposure can also be taken. So it is likely that there are many investors who have both direct equity as well as mutual funds in their portfolio, because sometimes the kind of exposure which is present with mutual funds is not possible with direct equity, because in terms of the range of options which are available, similarly the vice versa is also true. So normally people who are able to do things on their own, who know the markets, who can take this kind of volatility in their stride and remain invested over a longer period of time, for them some exposure in their portfolio for their equity allocation through direct equities is also a good option. Now the problem here is that when there are a lot of people who take either the derivative route to make quick money, or they use equity as a means of just making money in a very short period of time. So if you adopt this kind of approach, the chances are that you might do well when the overall market is rising, but when the downturn occurs, the losses can also be huge. So whenever you are looking at either a mutual fund or direct equity for exposure, get your basics right, get your basic thought process right. That is very important.